With price appreciation year over year in Q1 totaling 14.3% in the state of California, many are asking themselves the question, when will the carnage end? And if you've been watching my videos for any period of time, you'll know that, well, the forecast has been wishy-washy. I mean, there's some weeks where it looks like the market's going to be coming down here any minute, and then there's some weeks where it looks like it's never going to end. But before we get into the data and before we get into all of the news here in the Bay Area housing market, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to help you, assist you in your home buying decision-making process, you can text the word data plus the zip code, area, or neighborhood that you're looking in. We'll get that data set straight over to your inbox. And if you're a home seller in today's marketplace and you're looking for a data set to help you price your property appropriately now more than ever, pricing strategy absolutely matters. You can text the word data plus the zip code, not the zip code, the address, your property address, and we'll get that sent straight to your inbox. All right, so let's get to the main topic here today. When will home prices come down? Will they ever come down? And really, when we ask ourselves this question, it's the simple, basic economic theory: supply, demand. And for many weeks, the topic has been, look at the housing supply, look at how low the inventory is. And if you watched the previous Silicon Valley snapshot, you'll know that things have been kind of going in the opposite direction than what we thought they'd be going in. Earlier this year in the spring, we saw housing inventory starting to creep up year over year. And so with those numbers, we were starting to say, wow, the market is still doing phenomenally well, still increasing, still appreciating, despite the fact that we're seeing more houses on the market right now than we did at the same time last year. That was like an April timeframe. Well, now just a few weeks ago, we were starting to see the June numbers creep back down to where it was below where we were seeing at this time last year. So things are really interesting right now when it comes to paying attention to the inventory levels in the Bay Area. And we don't know what's going to happen over the next couple of weeks, but as the numbers continue to come out, you can rest assured that you will be the first ones to know how the June numbers posted up here in the first couple of weeks of July. So be on the lookout for that next Silicon Valley snapshot where we go over June numbers. I think that's really going to be a big indicator as to whether we're going to see a low inventory summer or if we're going to start to see inventory levels continue to creep up. The first few weeks in June, we were starting to see those inventory levels very suppressed. And if we continue on that path, then you can rest assured that it's going to be a brutal summer for any home buyer looking to buy in the Bay Area. The question is not like, if you're a home seller, should you sell? But the market's very frothy right now. And so if you're a home seller, if you're in a position where you're like, I'm thinking about selling in 12, 24 months, we don't know what's going to happen in 12 to 24 months. And I've seen it happen way too many times where sellers hold on for just a little too long and the market conditions don't necessarily equate to what they were expecting. But if you're a home buyer, it's a totally different story. You don't really know. It's the fear of the unknown. Am I truly buying at the peak, or is this going to continue for 6, 12, 18, 24 months and on? And what's interesting is that right now we are experiencing a wave of buyer fatigue. Fannie Mae reports that for the second consecutive month, consumers also reported a significantly more pessimistic view of home buying conditions on net. That component fell to an all-time survey low, with only 35% of respondents believing it's a good time to buy a home, down from 53% in March. Year over year, the HPSI is up 12.5 points. Now, for clarification, the HPSI is the Home Purchase Sentiment Index, which is the graph that you're seeing on your screen right now. So basically, the majority of home buyers right now don't feel like it's a good time to buy a home. That is the telltale sign of buyer fatigue. All systems say The market is on fire, and it's going to continue to be this way for a significant period of time. There are no leading indicators right now of a market correction. We're not starting to see inventory levels rise dramatically. We're not starting to see buyers drop out dramatically. We're still seeing pending sales in most parts of the Bay Area, in most parts of Silicon Valley, far exceed the inventory levels right now, meaning that the absorption rate, the thing that drives the housing market, the telltale sign of a healthy housing market, is above 100%. And you only need it to be over 33% in order for it to be considered a seller's market. So we are, for all intents and purposes, in an incredibly frothy seller's market, and we don't see it slowing down anytime soon. So why wouldn't buyers want to hop on that appreciation train right now and let it ride out for the next 6, 12, 18 months and stockpile a bunch of dollars into their piggy bank, into their net worth in the form of equity? And really, there are 7 realities when it comes to buyer fatigue and what brings on this buyer fatigue into the marketplace. Number 1, we have record high prices all over the Bay Area. And by the way, what you're seeing right here is national, but it's just as applicable to everything that we're experiencing here in the Bay Area. In fact, I would argue everything is exacerbated here in the Bay Area. We have record low inventory. That's not front page news. We have record high percentage of sales over list price. Yes, the vast majority of areas in our marketplace, we're seeing sales price to list price ratios of 110% or more in some areas. Now, does that mean that we are seeing home prices appreciate 10% month over month over month? Absolutely not. It's the agents using the same strategy they've used for many years now, which is list low, sell high. Use the bidding, the bidding wars, the multiple offer scenarios to drive the home prices up well above their market value. But if you're pricing a home $150,000 under what it's actually worth, of course you're going to get multiple offers, and of course you're going to get bidding wars. It's fatiguing though, because the buyers don't necessarily understand that, and they're not primed for it at the beginning. And that's what brings on this buyer fatigue, is that inability to understand that market value and list price are 2 completely different things. Number 4, we have record low days on market. Homes are coming on the market one day, and then 5, 7 days later, they're sold. We also have record low mortgage rates. That's driving buyer fatigue because it's increasing the number of buyers that can buy. Also, half of the houses listed in April went pending in 1 week or less. That's incredible. And finally, 19% of homes sold in April had their appraised value come in below the contract price. That's the biggest one, honestly. If we're looking at just empirical data, there's nothing to suggest that the market's going to go down. In terms of understanding how crazy this market is, you don't need to look any further than the fact that buyers are putting cash down. They are literally paying more cash than they were accustomed to paying before to cover appraisal shortages. The demand is so healthy, it's so strong, and day one, buyers have so much equity in the property that anyone in their right mind who's saying, oh, this market's going to go down, we're going to see the same thing happen in 08, 09, is simply uneducated. Because what happened in 08, 09 is that buyers bailed out of their home because they had no equity in them. They didn't have anything to lose. But if you're telling me that a buyer who's got $600,000 tied into a $2 million home isn't going to do everything that they can to hold on to that thing, you're kidding yourself. So don't be fooled by this sudden ramp up in pricing, thinking, hey, we're in a market very similar to 08, 09. The run up, the appreciation might be similar, but the cause, the effect is the same, but the cause is completely different. And because the cause is different, the home price stability due to massive liquidation of properties like we saw in 0809, like the home prices are going to be so much more stable this time around if there is any sort of correction, because we will not see fire sales happen like we did back over a decade ago. But honestly, who saw this coming? According to The Atlantic, the 2021 housing craze feels as sudden and shocking as the pandemic, but it has been decades in the making. The emergence of the huge millennial generation in the 1980s made strong housing demand in the early 2020s entirely predictable. The Great Recession's clobbering of the construction industry made today's housing shortage equally foreseeable. And this is interesting, right? Because while it may have been painfully obvious to so many, we, for the last 10 years, have been fooled by the media saying, oh, the millennial generation, they don't want houses. They like urban apartment style living. They don't save any money. They're bad. Not looking so bad right now. The interesting thing is that as we move into the 2020, into the brunt of the 2020s, we're going to continue to see millennial spending in the housing market increase and increase. We're just starting. We're like right in the middle of the millennial generation buying. And so we're starting to see that millennial generation pop. And for those asking themselves, the buyers that are fatiguing out right now, my gosh, this will end eventually. Well, a word of caution. The buyers that The Atlantic is talking about, they're the ones getting out of college right now, learning how to code. They know coding better than you do. The younger generation understands technology, everything much better. They're coming in, they're getting incredibly high paying jobs here in Silicon Valley to start. And those buyers will be the driving force behind the housing market here in Silicon Valley, in the Bay Area, for the next decade. So case in point, there will be no shortage of home buyers here in Silicon Valley or in the Bay Area for the foreseeable future. The demand is here because we are tech, and tech drives the world, and we have a ton of millennials in our ecosystem right now who are rearing and ready to buy. They're getting married. Do you know how many weddings I'm going to this year? I mean, for Christ's sake, the next 12 months, I can't go on any vacations because nearly every weekend I have a wedding to go to. They're getting married, they're going to have kids, they're going to buy, and not necessarily in that order. Bottom line, there are no shortage of buyers in our ecosystem right now, especially here in Silicon Valley. And interestingly enough, the national payment to income ratio is incredibly low. Today, it's only at 20.5%. Now, that is an increase in the average over the last 5 years of 20.1%. But the average over the last 25 years has been 23.6%. So we're actually below the trailing 25-year average of the national payment to income ratio, meaning that on average, Americans are spending 20.5% of their income on housing, and more importantly, mortgage payments. Black Knight reports that should home price appreciation continue at its current rate and 30-year rates slowly rise to 3.5% by the end of 2022, the national payment to income ratio would hit 21.6% by the end of this year. So look back at that graph. We're still 2% below the trailing 25-year average of national payment to income ratio. And I would argue, I would love if someone could figure out how to get like this kind of data for the Bay Area housing market. I mean, that would be very interesting to see, because we're starting to see the boomer generation sell. And the only thing that the consistent messaging that I hear is, my gosh, I can't believe anyone can afford this home. And I am sure that when they bought their homes, the generation that sold to them said the same exact thing. But this is the natural evolution, the natural scaling up of the housing market. Home prices appreciate. That's just how it is. And inflation is a driver too, but we're not going to get into that. We'll talk about that on another Silicon Valley snapshot. But for today, if you're a home buyer and you're sitting on the fence and you're thinking, I don't know. This might not be the right time. I would argue that right now in the summer, as we start to see home buyers go on vacation, COVID is allowing people to get back to a sense of normalcy. They can go visit family, leave town, and the buyers that stick around over the next couple of weeks could find themselves seeing opportunities, identifying opportunities that may not have been there just a few months ago. So, word to the wise, if you're watching this video and you are thinking about making a move in the next 6 months, you're a buyer, and you just listen to everything that I just said, prices don't seem like they're going anywhere. So take the opportunities when they come, because there might not be another one for another 6, 9, 12 months. This is Danny Gould with the Selling Silicon Valley Group, and I will catch all of you in the next video.